Welcome back to Factful Finance, where we make finance feel less like a puzzle and more like a strategy for success. Did you know that in the last decade, inflation has eaten away at the purchasing power of the dollar by over 20%? If you're like many in Gen Z, you're feeling the impact more than ever. The cost of everyday items is rising, and the ability to stretch your paycheck seems more challenging by the day. But don't worry, you're not alone. And more importantly, you can take action to protect your financial future. Today, we're talking about how to inflation-proof your finances, the Gen Z way. Whether you're just starting out or already thinking about long-term goals, it's crucial to understand how inflation works and how you can beat it. Before we dive in, a quick note. This video is for educational purposes only. Always consult a financial professional for personalized advice. So, let's get to it. How do we protect ourselves from inflation? First, we need to look at the basics of inflation and how it affects your finances. Inflation is the rate at which the general level of prices for goods and services rises, meaning the purchasing power of your money decreases. Think of it this way. If you've noticed your favorite coffee shop raises their prices every year, that's inflation at work. Over time, it can significantly impact your savings and investments. Now, let's break this down into actionable steps for protecting your wealth against inflation. Step 1. Embrace investing. The first, and probably the most powerful way to outsmart inflation is to invest. It may seem intimidating, but consider this. Over the long term, investments like stocks and real estate generally outperform inflation. Take Elijah, for example. At 25, Elijah decided to start small with a monthly investment into a diversified index fund, averaging a return of 7% per year. Fast forward 5 years, and his money is growing faster than inflation. While the cost of living increased by around 20%, his investments helped him stay ahead. Diversifying is key here. If you're putting all your money into a savings account or under your mattress, it's not working for you. Stocks, real estate, and even commodities like gold can help hedge against inflation's impact on your purchasing power. Step 2. Build passive income streams. Now let's talk passive income. Inflation can erode the value of your savings if it's just sitting there. So why not make your money work harder for you? One of the easiest ways to do this is through rental properties or dividends from stocks. Take Amelia, for example. She started investing in dividend-paying stocks while working a full-time job. Today, she receives monthly income from her portfolio, which helps offset the rising cost of living. Her investments are inflation-resistant because the dividends usually rise with inflation. If you're new to passive income, don't stress. Start with smaller investments and gradually expand your portfolio. The important part is starting early. Step 3. Be smart about your spending. If you're feeling the sting of inflation right now, it might be time to take a good look at your expenses. Instead of spending on trendy gadgets or impulse buys, focus on things that will maintain or even grow your wealth. Sophia was facing high rent prices and rising grocery costs, so she used budgeting apps to trim her discretionary spending. She switched to a more affordable apartment, started meal prepping, and prioritized saving for an emergency fund. These small tweaks made a big difference, allowing her to protect herself from inflation's bite. Step 4. Leverage tax-advantaged accounts. Another powerful tool to fight inflation is tax-advantaged savings accounts. Accounts like Roth IRAs, HSAs, and 401ks allow you to grow your wealth without paying immediate taxes on your returns. William, for example, maxed out his Roth IRA contributions every year. Not only did this shield his investments from taxes, but the returns from his stock investments are growing tax-free. By consistently investing in these accounts, William is not only beating inflation, but doing it efficiently. Step 5. Stay informed and adjust. Inflation isn't something that happens overnight, so staying informed is essential. Keep an eye on inflation rates and adjust your financial strategies accordingly. For instance, if inflation is rising faster than expected, you might want to tweak your investment strategy or shift more of your funds into inflation-resistant assets like Treasury inflation-protected securities, TIPS, or other real estate investments. As for Noah, he regularly checks his portfolio's performance. When inflation took an unexpected turn last year, he moved more of his money into inflation-protected bonds. This way, his investment growth stayed on track. Inflation-proofing your finances isn't just about keeping your money safe. It's about making it work harder for you. By investing early, diversifying your assets, generating passive income, and making strategic decisions with your spending, you'll build a financial future that stands strong against rising prices. Now, here's my question for you. What's the first step you'll take to start inflation-proofing your finances? Drop a comment below. I want to hear your thoughts. If you found this video helpful, don't forget to like and subscribe so you don't miss out on more tips to help you reach your financial goals. If you like what we're doing here, why not click the bell so you're always in the loop when we drop new videos? Trust me, you'll want to stay informed, and the next video we've got on screen will definitely help with that. Thanks for stopping by, and remember, your financial future starts today.